Hi everyone and welcome to today's morning report on Tuesday the 19th of January with me, Rich Pro Market Analyst at Handset Markets. We've had a decent start actually in Europe, and that's pretty much come on the back of this Chinese growth data. It was certainly going to be the risk element of the early part of the week, and it's coming in line with expectations pretty much on the GDP data, and that has helped to reassure markets. This morning. Now we've had the quarter-on-quarter data at 6.8% for the making 2015 at 6.9%, which was basically in line with expectations, even though that's the lowest since 1990 in terms of the growth data. That was in line with expectations, and that has helped to reassure sentiment. Other aspects of the data out this morning weren't quite so positive. We had retail. What's this? This is industrial production, which was slightly under expectations at 5.9. It was expected to be 6.0, and then retail sales slightly missed as well at 11.1 versus 11.3 expectations. So there wasn't sort of across the board positivity, but the markets have taken it certainly in good light, and certainly the markets are stronger in Europe as a result. I think it's just the fact that the GDP data didn't disappoint, and that has been a big concern in the markets in recent times. So certainly Chinese growth in expectations is a good thing for the market, because obviously there's been such a concern that all this data out of China would mean that they would be missing all their growth figures. And there are always sort of accusations of them fixing the number, but for now, certainly the market's taking it as a positive. Depends on how. It'll be interesting to see how the US comes in actually this morning, but this afternoon, as to whether this continues to go today. Now, what we have got is a general improvement in risk across the board, pretty much. What am I looking for? That US trade weighted dollar, pretty much in line with as it has been trading, but the treasury yields are slightly higher. That's a bounce on the 10-year and a bounce on the 2-year this morning, and that's pretty much playing out through these markets. Really, the FX markets are showing across the board an improvement in risk appetite. I'll talk you through the slight slide in the euro, but also sterling bouncing, which is an interesting one, and also dollar yen bouncing today. So that's an improvement in risk appetite across the forex markets. What have we got to look forward to today? Well, we've got quite a fair bit of data actually. We've got the UK inflation data. That's expected to sort of, well, coming pretty much in line as with last month, 0 0.1, depending on where you get your estimates from, 0 0.1, 0 0.2 is the expectation. Core data is expected to come in again at 1.2 for the CPI, so no real sign of a pickup in inflation in the UK yet. That's at 9:30. That will have certainly an impact on cable. And then at 10 o'clock, you've got the German ZEW economic sentiment, expected to come slightly lower, actually. That would sort of reverse 2 months of improvement, slightly coming down at 8.2 is the expectation there. That would be, that would be a 3-month low on the ZEW. And then into the afternoon, we've got the US housing data, the NAHB housing market index, which is again expected to come in line with last month at 61. So quite a lot actually to drive markets today, and obviously with the US having been off for Martin Luther King Day yesterday, there's a bit of catch up, so it could be a bit of volatility this afternoon. Now my chart of the day is the FTSE 100. Now I started sort of considering doing the FTSE yesterday. Let me just show you the daily chart. Yes, I started looking at this yesterday because it held on to this support. 57.68 was that key low that we saw in August, that big spike low. That pretty much held on Friday. 67.69, 1 point off. 67.66 yesterday. So you'd still say that is that is a support holding, but not only that. I sort of noted yesterday that this was a bit of an almost, well, inverted hammer. It's not a bullish signal yet because it sort of still is at the bottom of the was up at the bottom of the trading session, but there was initial buying that got sold into, but that initial buying has certainly helped to bolster the markets today, and we're seeing a bounce. Now this bounce, do we back it? Well, at the moment I'd be a little bit concerned because this old resistance at 58.72, which is a consistent resistance. Look at that. 58.77 was the October low, September low. So 58.72 is a big overhead resistance. Again, coming into play with that 12th of January low. And it's basically where we're trading now, isn't it? So it is a level that the market is looking out for. Now we had an initial move up to 5,900 on the FTSE, and that fell away. Now that would be in line with the fact that we've got this sort of falling 55-hour moving average, which is the basis of resistance. It's not amazing, but also looking at the hourly momentum as well. Hourly RSI up to that level as well. Hourly MACD lines have improved, but still just effectively unwinding this oversold situation. So it's not yet a rally that you'd be buying into. You haven't really done anything to sort of arrest this decline, this consistent selling into strength that the market has been doing throughout January, where all the little rallies are falling and finding resistance at lower levels. The latest move, you'd argue, is 5,950, which was that reaction high there on last Friday, actually, or last Thursday. And that's the level that needs to be broken near term, I think, for you to start getting more interested in a recovery in FTSE. Until that happens, I think you're still sort of playing out this selling into strength. I mean, it is an initial improvement in FTSE. It's nothing that you'd get overly worked up about yet, because I think that there is certainly more that needs to be done, and certainly even around this sort of resistance at 58.72 is really interesting as well. The fact that that's turned over just as the momentum indicators have unwound. So yeah, there's more that needs to be done on this FTSE 100 rally, and certainly that will be needs to see risk appetite sort of holding on for a good day or so, because it seems to be every time an intraday rally is sold into at a lower level. So it just can't get a run at the moment. So whether this continues or not, or whether once again this rally rolls over at 5,900 would be interesting to see, but at the moment you've still, I think, got to play out selling into strength. So I wish you good luck in your trading on FTSE today, and I'll speak to you later.